So there's this one banking upgrade happening late in 2025 that honestly is quietly rewiring the entire financial plumbing between Africa and the rest of the world. We're talking about a massive shift in how hundreds of billions of dollars in trade get settled. It's kicking off a whole new era for African finance. But to really get why this is such a huge deal, we have to start with a kind of weird question.
I mean, it makes no sense, right? The goods are moving directly from east to south, but the money takes this wild detour out west. Well, that bizarre little trip is at the very heart of the old financial system, and it highlights this massive, expensive problem that you'll see has just been solved.
All right, so to really appreciate just how big this breakthrough is, we got to first look at the old way of doing things. This really convoluted process that some analysts have nicknamed the New York U-turn. It was just the way things were done for global trade, but man, it came with a seriously heavy price tag for Africa. So let's walk through this old, clunky path the money used to take. Say you're an importer in South Africa. You couldn't just pay your Chinese supplier directly. No way. First, you'd have to sell your local currency, the rand, for US dollars. Then, using the SWIFT messaging system, you'd send those dollars to a correspondent bank, probably in New York. From there, it had to get cleared through a system called CIPS, still in the US, and only then would it finally get sent to China, where it would get converted again, this time from dollars into Chinese renminbi. Just think about that. A four-step, globe-spanning detour for what should be a simple payment between two people. And this is where it really starts to hurt. I mean, every single step in that tangled process had a fee attached. You're paying the currency conversion spread, not once, but twice. You're paying high fees to all those middleman banks. And because of all the different time zones, payments would take anywhere from 2 to 5 days to actually settle. That's precious capital just tied up, doing nothing. Plus, the whole system depended on having enough US dollars on hand locally, which, believe me, isn't always a given. And here's the kicker. Every single one of those dollars passed through the US banking system. That effectively gave Washington a potential kill switch on Africa's trade with its partners. But then, in late 2025, everything changes. South Africa's Standard Bank announces a direct connection to China's very own payment system called CIPS. Now, this wasn't just some small technical upgrade. This was like opening a brand new direct financial superhighway between the African continent and its largest trading partner. Okay, so the key to this whole thing, the real secret sauce, is understanding the difference between being an indirect and a direct participant in the system. See, before this, other African banks could only access CIPS as indirect participants. That just means they still had to go through a proxy bank to connect. But Standard Bank, they became the very first African bank to become a direct participant. That means they have a dedicated direct line right into the CIPS system in Shanghai. No commercial middleman needed. That is their new competitive advantage. So what does this new direct route actually look like? Well, the difference is just night and day. That South African importer, their rand are now converted directly into Chinese renminbi. The payment instruction is sent straight to Shanghai, and the money settles in the supplier's account in minutes. Not days, minutes. That whole New York U-turn, it's not just bypassed, it's been made totally obsolete. So, what does this actually mean in real money? Well, think about this. Chinese suppliers, they used to add a 3 to 5% hedging premium to their US dollar invoices. It was basically insurance against currency swings. But now, by invoicing directly in renminbi, that premium just, poof, it disappears. For an African importer, that is an immediate direct saving on the cost of their goods. And look, this isn't some small-scale improvement for a niche market. We are talking about a trade relationship worth nearly $300 billion a year. The efficiency gains from this new financial rail are going to impact a massive and growing flow of commerce all across the continent. This isn't just a side road. It's like repaving the main artery of Africa-China trade. But, solving the China trade route is really only half the story. Because at the exact same time, there's been this parallel revolution picking up speed, building a payment system for Africa, by Africa, to solve an even more complicated challenge, just trading with your next-door neighbors. And this really gets at a paradox that's been around for a long, long time. For decades, it's actually been easier for a business in, say, Nigeria to trade with France than it has been to trade with its continental neighbor, Egypt. I mean, the continent has 42 different currencies, and the lack of a simple common settlement system has been a huge drag on growth. This whole situation led to what's known as the trapped capital crisis. Basically, companies earning money in one African country often couldn't convert it back into a global currency like the dollar to send home or pay other suppliers, all because of local shortages of that foreign currency. We're talking billions of dollars just stuck, unable to be reinvested or moved.
And just look at the pace of change here. It's happening so fast. In mid-2025, you have the Pan-African Payment and Settlement System, or PAPSS, launching a currency marketplace specifically to solve that trapped capital problem. A few months later, boom, Standard Bank's CIPS integration goes live. And then, by the end of that same year, PAPSS itself is expanding to include major economies like Egypt. You see, these aren't isolated events. This is a rapid, continent-wide rewiring happening all at once.
So what does this all add up to? Well, it means that for the very first time, African businesses and banks have a real, strategic choice. The unipolar world of payments, it's over. Now they have to navigate three totally distinct financial rails. And this table really brings us to the new reality, a choice between three different financial rails. First up, you've got the traditional Western rail using SWIFT. It's slow, can take up to 5 days, and it definitely carries U.S. jurisdiction risk. But its big advantage is deep global liquidity in dollars. Then you've got this new Eastern rail via CIPS. This one is real-time, uses the Chinese Renminbi, and it's absolutely perfect for integrating with Chinese supply chains. And finally, you have the emerging Pan-African rail, PAPSS. This is nearly instant, it uses local African currencies, and it was designed from the ground up to solve the continent's own trapped capital problem, all under the neutral oversight of the African Union. What this creates is an entirely new strategic reality. This isn't about replacing one system with another. It's about having options. It's about having the power to choose the best path for every single transaction. Welcome to the era of financial multi-alignment. And this, right here, is the single most important takeaway from all of this. Africa isn't moving away from the dollar. It is expanding its options. The goal isn't just to de-dollarize. It's to build a much more resilient financial future where Africa is no longer dependent on any single system or any single currency. Of course, this new power, it comes with new kinds of problems, new complexities. For instance, will there be enough Renminbi or local currency liquidity to actually meet the demand? And how do banks manage the compliance rules of 3 different jurisdictions that might, actually conflict with each other? And just imagine you're a corporate treasurer. Your job just got a lot harder. You now have to actively choose which rail to use for every single payment. That's a complex strategic decision you never even had to think about before. So the architecture is now in place. For the first time ever, African firms can literally toggle between Western, Eastern, and Pan-African financial systems. Their ability to strategically navigate this new multipolar landscape, well, that's what's going to define the future of commerce and innovation across the entire continent. The unipolar moment is over. The race is on.